Hey everybody. So decided that I would make a quick video on stock screening, show you guys a few resources on how to do it, a few of my thoughts on the value of stock screening and what you should look for when looking for companies, things of that nature, because it's something that we get asked a lot about, especially towards the beginning of the semesters. So I figured it would be helpful to make a quick video that we could reference too. So to start off, we have the stock screener from FinViz. FinViz is a pretty useful website that you can get into for free. You don't even have to make an account. Um, so you just click on Screener here in the Screener tab, and there are a bunch of different filters that you can use to sift through companies. So you can see there's 9,521 total companies without any screeners. So there's a lot here. It's a pretty complete database. So we could do under 10 PE, maybe we're looking for very cheap companies, under one price to book ratio. Sector, let's say I'm in the financial sector, so do financials. I could even go further in depth. I could do industries. Okay, I can do regional banks, the sector that I know a little bit about. Um, EPS growth this year. So we could do negative. That's probably going to be most of these, trading under book value and under 10 PE. So now we've narrowed it down to 66 different regional banks that are trading under a 1 P price to book, under a 10 price to earnings ratio. And from here, if this is something I'm specifically looking for, now I have a list. I can start going through this and looking at different companies. And a common question that I get that I think is a bit of a misconception is, what do I look for in a screen to find a good company to pitch or a good company to analyze? And I think this is a misconception. So the problem that's really at the root of this question is, how do I find something to look at to make an investment? And the stock screening is a tool that you could use to find lists of companies, but I don't think it provides any edge in and of itself. And we can think of that for several different reasons. So theoretically, we can theorize together. If it were that easy to screen companies, everything under a one book value that's a regional bank that's under 10 PE is going to outperform. That's something that's overly simplistic, and the market would have realized this a very long time ago. There's people that run algorithms that look for patterns in the market, and something as simple as this surely would have been found already, and capital would have been employed there. Thus, the strategy would have no longer worked, right? And if you do say, okay, I'm only going to look at stocks that are under book value, that are under 15 times earnings, then inherently what you're doing is you're making a quantitative bet on a risk factor. And in Brigham Capital, this is not something that we do. We look at individual companies. We want to figure out views on the idiosyncratic risk factors for individual companies, and we want to do much deeper analysis than just screening a company and pitching it because it looks cheap. Right? Price to earnings does not is not indicative of cheapness. If something trades at 10 times earnings, it could be expensive depending on what the business prospects look like. And if something trades at 100 times PE, that's something we might want to invest in if it's a very fast growing company and we believe that it's going to meet and exceed growth expectations. So that's something to keep in mind, that there's really no magic formula for screening and looking for stocks. Any stock could be a good investment. Um, and that's our job as security analysts, is to figure out whether that's the case or not. And so with that being said, I have a few things that we can look at in order, to find companies as well. You could come onto FinViz and screen for different things. It's nice. You can screen by sectors. So that makes it easy to find companies within your respective sectors that you can pitch, and even different industries as well, depending on what you're interested in. Another tool you could use that we've talked about in class before is going to um, index fund providers. So I have BlackRock's website pulled up here, iShares. And you can download the data of the different holdings that this ETF holds. So for this, I looked up iShares Value ETF, and this was one of the first things that came up, small cap value ETF. I've already downloaded the holdings here, so I'll drag this over. And you can see in Excel, we can now look through and see, okay, what is this ETF holding? And this essentially is like a list of companies that BlackRock has already screened out and decided to invest in. So we have Academy Sports, Alaska Air Group, which we hold in the Brigham Capital portfolio right now. A bunch of different companies. You can see there's also a sector here, so we could even filter by sector if we wanted to. Market value and what weight it has in the portfolio. And 13Fs are forms that investment managers have to file with the SEC once they meet certain criteria, one of them being they manage over $100 million worth of assets. So you can see here we have Scion Asset Management, which is Michael Burry's fund. The reason I picked this is I know that they disclosed their 13F yesterday, and it was making the rounds on Twitter. Everybody was talking about it. So you can go to Whale Wisdom, whoops, that I have pulled up here, go over to holdings, and you can see what Michael Burry's holding. So we can see that he increased his position in Alibaba by 25,000 shares or 50%. He also decreased his holdings in STLA. I'm not extremely familiar with that company. He sold all of it. So he sold 100% of this position. And this is useful because Michael Burry is an investor. He's someone that a lot of people respect. And maybe if you have some opinion about, his market skills, you could use this as a signal for interesting ideas. Maybe if you were holding STLA and you see that Michael Burry sold 100% of it, you might want to reconsider your thesis. What is he thinking that I haven't considered? Or if he's buying a lot of QRTEA, okay, what does he know that I don't know? Is this something that I should be interested in? To things of that nature. And I think it's a fun exercise to think about what the different market participants are thinking and what they're investing in. So that's a fun exercise as well. And the last words of advice that I would give about finding a company is at this stage in your career, we're all probably decently inexperienced in Brigham Capital. The way that it works in the real world is depending on what kind of a firm you work for and what the strategy is, you'll probably be looking at, let's say, 10 to 50 names that you're assigned. And your job is to get to know all of these companies really well so that you have a little bit of an edge when compared to, an investor that doesn't spend as much time looking at them or doesn't specialize in an industry or sector, for example. And so in the real world, you're not going to be looking for ideas by going through lists or by doing stock screens if you're working for a big asset management firm. If you're a generalist investor, maybe you run a family office, maybe that's not the case. Maybe you are looking at a bunch of different industries and sectors and you're screening and looking for new and interesting companies. But those types of jobs are generally more rare, and it's safe to assume that you'll probably be a specialist in some aspect. And for the purpose of Brigham Capital, really one of the foundational principles is we want to help students learn. And I think that that's best accomplished if you are researching something that you are very interested in. So whether that be a specific company or a specific industry, I think the best principle for choosing a stock to begin researching, ideally you're spending a decent amount of time looking into the company. Maybe as a group, it's close to 100 hours for the semester. It needs to be something that you're interested in, because if you are, you'll put in the work that's required to make an intelligent investment decision, and it's going to be a more enjoyable process to you. And it'll also be a better chance that you find something that's actually investable. So that'd be my words of advice as far as that goes. And that's everything that I have for this video.